the cost of getting into a house has skyrocketed with average 30-year mortgage at 6% in the last 1 year. But if you have to move, if you can get a lower interest rate, as in 3% interest rate or 4% interest rate, will you look into that? If yes, let's talk about assumable mortgage. Mortgage that can be assumed. So the question is, how does loan assumption work and what does it entail? Talk about that in a minute. Hey there, this is KG. I'm a realtor with Fairfax Realtor in Greenbelt, where we help buyers to buy a dream home and sellers to sell their houses. And we do this in the Maryland, DC, and Virginia region. So if you're looking to buy, sell, move, invest in real estate in the DMV or any other area, contact us below. We'll take care of you. And don't forget to subscribe to the channel to get updates once we upload a new video. So what is loan assumption and how does it work? That's what we want to talk about. What is a loan assumption and how does it work? So in this era, age of 6+%, loan assumption looks good. This is not a new phenomenon, right? People have been doing it for years, loan assumption. But when interest rate was down, it wasn't something people consider. But now that we are in the 6% territory, which really in the scheme of things is actually not a high interest, but because we have been spoiled for a long time with 3% interest rate, 6% looks so much high. And so what is loan assumption? Loan assumption is when you are able to take over an existing loan with the balance that is remaining on the loan and then keep that interest rate that the current seller owner has. So, if you have a seller that bought their house a few years ago, they probably came in at 6%, at 3% interest rate. So if you can get a seller that has an assumable mortgage and you're able to get that mortgage and keep the terms of the mortgage, this will allow you to lock in as a buyer to assume that mortgage, to lock into that low interest rates that the seller got when he bought the house and all the other terms, of course, with the understanding that you're going to qualify for that mortgage. So, caveat, not all loans is assumable. Not all mortgage loan can do assumption loan. So which ones can you assume? FHA loan, VA, and USDA loan. All those loans can be assumed. Conventional loan cannot be assumed. But of course, the ones that have an assumption clause, loan assumption clause, the seller needs to make sure what are the other things with it. That is what a loan assumption is about. So let's take an example. If a seller had a property selling and the loan is assumable, the balance on that loan is 300,000 and they have a 4% interest rate. So you can assume that loan at 4% with the balance of 300,000. Sounds good, right? Of course, sounds good, especially in this market that we're in at 6%. So let's talk about all that it involves when you want to assume a loan from a seller. So if you're a seller and your loan is able to be assumed, that means assumption clauses there, advertising your home with an assumable mortgage is actually a good thing in this market, and it will attract buyers, especially when the buyer know they can get a lower interest rate, 3-4% interest rate, compared to the 6% that is going on right now. So that may actually make the house sell fast as a seller, and the closing cost on assumable mortgage is actually lower than regular sale. According to FHA loans, one of the loans that can be assumed, the closing costs can also be rolled into the loan. So if a buyer wants to roll the closing costs of assuming that mortgage, they can roll it into the loan, or they can just pay it out of pocket for an assumable mortgage. But there's a drawback. Remember, I said the loan the loan balance is 300,000. If the loan is assumable, you can assume that 300,000. But that's the loan balance, not the sales price. If the sales price is 400,000, let's just say, for example, the is 400,000, but the loan balance is 300,000. What are you going to do? You can get a second mortgage or pay cash for the difference. Remember, the seller, you're assuming the balance of the loan, but that's not the sales price. The equity, the seller has to get their equity out. That's why they're selling. They have to make money. So that means as a buyer, you may actually get a second loan. It happens to pay off the equity, the sales price, the difference between the assumption and the sales price, or pay cash. That is the drawback to some buyers. To some buyer, it's not a big deal. It's also for VA, if the loan that is going to be assumed is a VA loan. As a VA, that's a benefit, right? So you want to make sure the person that is going to assume that loan is actually also a VA, because if they are not VA, your benefit as a seller will be tied down until that house is sold. But if the other person that is assuming the loan is also a VA and they have VA benefit, they can transfer and get that loan off your name, the loan off your name when they assume, and then your release, you can now buy another property with your VA benefit. So that is one of the drawbacks of assumption loan. While sellers could potentially make more money with a house that has an assumable mortgage, as a seller, one of the first things you want to do is to call your lender to make sure you get all the details and the requirements and what it involves for your loan to be assumed, so that a buyer will have all the details of what they need to do to get that loan assumption, especially if the interest rate is lower. So before you start advertising your house as an assumable mortgage loan, get detail, get facts from your lender, and make sure you get it in writing and is able to be presented to the potential buyer so that they know what they're going to get. As for buyers, while it is not the simplest route to home ownership as in loan assumption, it is also worth exploring though. So don't, because of the drawback, be discouraged. It is worth exploring. And if you are able to assume a loan at 3% interest rate, that is a great saving and probably going to be cheaper than buying a house with 6% interest rate, especially if you are able to make up the difference in the sales price and the loan balance. All right, so do you know anyone that did loan assumption, or did you do loan assumption, or you're thinking about doing loan assumption? Drop me a comment below. Hey, so this is KG. I'm a realtor with Fairfax Realtor in Greenbelt. Don't forget to subscribe to the channel. Don't forget to like the channel and don't forget to share the channel. Until next time, if you're looking to buy, sell, invest in the DMV area, or do a loan assumption, contact us below. We'll take care of. And don't forget, see you next time with another question about home ownership. Ciao. Happy buying.